Hello everybody, this is Patrick MontesDeOca with the Equity Management Academy live trading room special report for the gold market. This is September 10th, 2019. This is the latest report that we published in Seeking Alpha called Gold. Time to load up the truck again. The weekly trend momentum of 1475 is bullish as we came into this week. The weekly VC PMI of 1527 is bearish. When the market closes below 1527, it activates a bearish sentiment. But the other side of the story is that if we close above 1527, it negates this bearishness to neutral. The fact that the market closed below 1527 activates the levels below of the extreme levels of the average price below. In this case, the B1 level is 1494 and the B2 level is 1473. As we look at the previous metals markets, I wanted to use the variable changing price momentum indicator, the VC PMI, to the markets and see what it is telling us for this coming week. In our Seeking Alpha reports, we have published other reports that indicate for us basically the momentum of the market, the energy of the market, and this is where we pretty much publish this information. And in this report that was published on August the 30th, we pretty much anticipated the sell 2 level of 1564 to be activated with a 95% probability that the market will be reverting back to the mean of 1527. As we take a look at the chart for this week, the high was 1566 on September 4, 2019. The VC PMI provides a structure for the day swing trader and acts as a GPS for your trading pretty much with about 95% probability. This is not a guarantee. This is a mathematical probability model that we use. So don't get that confused. Gold has built an area of resistance where you can expect sellers to come into the market. If the supply is greater than the demand, it will be reflected in the price. When gold closes below the sell 1 level of 1565, it activated a short signal on September the 4th. The automated algorithm identified the targets below that level to allow you to manage your inventory as a self-directed trader for stocks, ETFs, futures, options, stock indices, or whatever you're trading. The VC PMI can be used on a daily, weekly, or monthly, or an annual data for, again, day, swing, or position traders. On Seeking Alpha, we primarily use the weekly data and an indicator, as well as sometimes we publish the information based on the monthly data. What we're taking a look at here is the weekly data that we have. After the supply came in, it brought the market below the average price of 1527, and the price closing below that level means that we're coming into this week with a bearish sentiment. And it prepares you basically for the market that coming down below 1527, it has activated a buy 1 level of 1494 and a buy 2 level of 1473. The B1 means levels. Basically, it means that it's a 90% probability level that if activated, the market will revert from that level to the mean back up to 1527. If the market reaches the B2 level, there is a 95% probability that the market will revert back from there to the mean of 1527. We use the 15-minute bar for day trading purposes. Your protective level is a close below 1494 using the close of the 15-minute bar. We do not recommend using straight stops. If the blue area is activated in the chart, it shows the area of demand. If the price as we come into next week closes above 1527, it would activate a bullish trend momentum in the sell 1 level of 1548 to the sell 2 level of 1581. Recap. As we come into this week, the price closing below at 1515 has activated a bearish trend momentum by closing below the average price of 1527. The average price is also used as a protected level to identify when the sentiment of the market shifts. If it closes above 1527, the bearish sentiment will shift to neutral. A second close above it would activate a bullish sentiment to the sell 1 level of 1548 to the sell 2 level of 1581, automatically activated. Conversely, if the price comes down to 1494 to 1473, it would activate a bullish setup. And look out for a buy trigger. It appears that this major sell-off in gold and silver has eliminated a lot of stops underneath the market as it has cleared the path all the way down to where we're approaching the 1500 levels, which indicates a major area of support. Buy corrections into that 1500 area, 1494 basis December gold contract.
Are you looking for an automated artificial intelligence trading system? Do you want to analyze commodities and financial markets to determine when to buy and sell? Looking for an indicator to predict future trends in the commodities and financial markets? Welcome to EMA2 Trade Live Signals. Our variable changing price momentum indicator, VC PMI, is an automated AI trading system developed and tested over a decade. The VC PMI algorithm is based on age-old vortex mathematics combined with Fibonacci wave theory, trend analysis, pivot points, and several other widely accepted financial analytical methods. The VC PMI can help you take emotions out of your trading and rely on simple mathematics to predict future trends in financial markets. This approach will make your trading more effective, consistent, and profitable. VC PMI algorithm. The VC PMI code points and levels are support and resistance levels and behave exactly like any historical supply and demand level. Therefore, the VC PMI code levels are useful as an index tool for both day trading and for selecting and exercising entries and exits for longer-term traders. Why VC PMI? The VC PMI relies on artificial intelligence to analyze markets and predicts future movements, which seek to determine what a security or commodity is worth at a given point in time. The VC PMI uses technical analysis in the form of mean reversion trading, which seeks to capitalize on extreme changes in the pricing of a particular market based on the assumption that it will revert to its previous state. The VC PMI can be applied to both buying and selling, as it allows a trader to profit on unexpected upswings and save when security or commodity is trading at an abnormal level. Visit EMA2trade.com for more details.